Welcome to the Deep Dive, where we cut through the noise and get straight to the insights. Today, we're plunging into an industry that, well, it touches millions of lives, yet often kind of flies under the radar: insurance.
It really does.
But we're not just looking at any company. We're dissecting the performance of a true titan life insurance corporation of India, or, LIC.
Ah, yes, LIC.
Which isn't just a financial entity. It feels more like a national institution in India, and honestly, a pretty significant global player, too.
Indeed. When you talk about insurance in India, LIC is just. It's the name that immediately comes to mind for millions. An undisputed giant.
Absolutely. So our mission today is to really unpack the key figures, understand the strategic shifts, and pull out the most important insights from LIC's Q1 FY26 financial results.
Which were just approved and released very recently, August 7th, 2025.
Exactly.
And we've scoured LIC's investor presentations, their press releases, even the recent earnings call transcript.
Just trying to get the full picture.
Right, to pull out the truly important pieces, giving you a complete picture, sort of straight from the source.
Okay, let's unpack this then. LIC is colossal, and its identity goes far beyond just being an insurer. They are, first and foremost, the largest life insurer in India, the undisputed market leader. But their reach extends way beyond that. They're the fourth largest insurer in the world.
Which is incredible. And what these numbers truly reveal isn't just market dominance, but LIC's unique
Role. It's like a financial safety net for this vast, often underserved population in India.
Yeah, that's a good way to put it.
It's not just an insurer, it's almost a socioeconomic state.
They even bagged a Guinness World Records title.
I saw that.
For most life insurance policies sold in 24 hours. I mean, that's just phenomenal. A testament to their reach.
Truly.
And their product portfolio. Equally comprehensive. 51 offerings as of June 30, 2025. Covers everything: individual plans, group policies, designed to suit customer life cycles.
And these foundational facts, they're critical because they really highlight LIC's immense influence and scale, not just financially, but its societal impact too.
Yeah.
They are a bedrock, really, of the financial landscape in India.
So with that immense scale established, let's talk about how that translated into their Q1 FY26 performance. What were the big headline numbers? This is for the period April 1 to June 30, 2025.
Well, looking at the top line, LIC saw pretty healthy growth, really across the board.
Yeah.
Profit after tax, it jumped over 5% to nearly 11,000 crore rupees.
Okay.
Total premium income was up almost 5%, hitting close to 1.2 lakh crore.
Wow.
And their assets under management, the AUM, grew by nearly 6.5% to a staggering 57 lakh crore rupees.
57 lakh crore. Just to give our listeners a sense, that's roughly 680 billion US dollars. The scale is just immense.
It really is.
So it sounds like a steady, strong financial quarter overall, wouldn't you say?
Absolutely. These overall figures clearly point to a robust financial footing for the corporation. And they maintain their market leadership, right? Overall market share by first year of premium income holding strong at over 63%.
Okay, here's where I think it gets really interesting. Let's dig into the nuances a bit. Premium growth, drivers of profitability. What about the breakdown?
Right. So total individual business premium increased
By over 6% to roughly 71,500 crore rupees.
Okay.
And total group business premium also saw growth, up about 2.5% to just under 48.
Exactly. And the explanation links this to new surrender value regulations that came in after October 2024. These are essentially new rules about how much policyholders get back if they cancel early.
Okay, so those rules changed things.
They did. The impact seems to be an increase in the average ticket size of policies that went up by 23%, and the average sum assured rose by an impressive 50%.
50%, wow. So fewer policies, but significantly higher value per policy. That makes sense logically.
It is.
But I wonder, does focusing on higher ticket sizes, even if it's profitable, risk maybe alienating some of the mass market, or maybe first-time policyholders who might want to
driving that margin improvement specifically?
Well, a key driver seems to be the increased share of non-participating or non-par products within their individual business.
The non-par products. Right, we hear a lot about those.
Exactly. Their share of annualized premium equivalent, or APE, rose significantly.
How much?
It climbed to over 30% in this quarter.
Up from about 24% in Q1 last year. That segment grew over 32%.
So a big jump in
A
non-par.
very big jump. And this shift to non-par, it isn't just about chasing.
U.S. unit-linked insurance plans. While those typically have lower margins, they apparently contributed significantly to the overall VNB growth, just coming off a low base.
Yeah.
So growth across different product types driving that VNB.
Got it. And it seems they're also tightening their belts a bit. The overall expense ratio saw a notable reduction.
It did, yeah. Down by 140 basis points, came down to 10.47% from 11.87%. That's a significant drop.
That is significant.
It is. And this reduction seems to be a clear result of conscious
Expense optimization efforts, as they put it. It's about balancing their workforce and tech investments.
Yeah.
And apparently, it's considered one of the best expense ratios among their listed peers.
So strong grip.
Absolutely. Currently stands at an impressive 14.86 lakh agents. That's nearly 1.5 million.
And they added agents recently?
Yeah, a net addition of over 61,000 agents in just the last year. This force is still incredibly dominant, selling almost 99% of individual policies.
Wow.
And contributing over 92% of new business premium.
That's huge dominance by the agency channel.
It is. But what's insightful here is the company's strategy isn't just about growing the numbers.
They're focused on enhancing agency productivity
How so?
through intensive training for existing agents and also actively recruiting from the millennial segment, trying to position agency work as
Pretty much, reaching almost 862 crore rupees. Bank assurance alone grew over 70%.
So these alternate channels are becoming more important.
Definitely. They now represent nearly 7% of individual new business premium. That's a notable jump from just over 3.5% a year ago.
That diversification seems key.
Absolutely crucial, especially for increasing insurance penetration in a country as vast and frankly still underserved as India. They're reaching new demographics, new geographies this way.
And here's an initiative that really caught my eye. The Bhimasaki Yohana,
Ah, yes, the Women Empowerment Scheme.
launched in December 2024. As of June 30th this year, nearly 2 lakh women appointed as Bhimasakis, selling over 3.2 lakh policies already, generating over 429 crore rupees in new business premium.
That's impressive progress in a short time.
It is. And what's even more impactful, I thought, was that over 60% of these policies and nearly 57% of the premium came from rural areas.
That's powerful. It's quite an image, isn't it? Women empowering other women financially, especially
Yeah.
in rural India.
Exactly.
That's social impacts way beyond just selling policies. It really showcases an innovative approach to reach remote populations, increase financial literacy. It's very interesting.
And LIC isn't just sticking to traditional methods. They're making big strides in digital solutions too, right?
Oh, definitely. Their Ananda app, which lets agents process new business digitally, saw a nearly 40% increase in policies completed that way.
So agents are adopting digital tools more.
Seems so. And they're also undertaking these massive digital transformation projects with external consultants,
What's the focus there?
building a robust data lake, a data analytics platform,
Yeah.
and integrating AI and machine learning into underwriting risk assessment. The whole value chain, really.
So a big tech push.
A huge push. The long-term vision behind it is clear. Achieve seamless integration across operations, become a top-tier digital service provider. They're talking 2030 or even earlier.
Ambitious timeline.
It is. But it's about staying competitive, meeting modern customer expectations, and just leveraging technology to optimize everything.
Let's turn now to the core indicators of LIC's financial health and maybe its place in the broader Indian economy. The solvency ratio, how does that look?
Looks very strong. It improved significantly to 2.17 in Q1 FY26. That's up from 1.99 in Q1 last year.
And the requirement is?
The regulatory requirement is 1.5, so 2.17 is comfortably above that.
A good buffer.
A very strong buffer. The company has actually stated its comfortable range is typically between 1.8 to 2.0, so they're even above that now.
They're also assessing the ongoing shift to a risk-based capital, or RBC, regime, which will eventually change how solvency is measured.
Okay. And what about
policyholder retention and overall value, persistency ratios, how are those holding up?
Bit of a mixed picture there, but mostly positive long-term. The 13th month premium persistency, so people sticking around after the first year, stood at 75.63%. That's actually slightly down from 78.23% last year.
Okay. A slight dip short term.
But the 61st month premium persistency, so 5 years out, that actually improved. It's up to 63.85% from 61.62%.
That's encouraging for long-term stickiness.
It is. Persistency ratios are vital. They directly reflect customer trust and satisfaction. So while the 13th month saw a slight dip, that improvement in the 61st month is pretty encouraging. Shows strong long-term retention.
And what about claims? Paying out when needed is core to insurance.
Absolutely. Their death claim settlement ratio was 94.59% by number for Q1 FY26. That's down slightly from 96.32% last year.
Down slightly. Any reason given?
Not explicitly, but it's worth noting this was despite a 7.5% increase in the total amount of death claims paid. So they paid out more money, even if the percentage settled by number dipped a tiny bit. Still a very high ratio overall.
Still very high.
Okay.
And their Indian embedded value, the IEV.
That stood at INR 7,076,876 crore as of March 2025, reflecting a solid 6.81% growth over the previous year.
So the underlying value is growing steadily.
Exactly. Embedded value, in essence, is a key measure for the long-term shareholder value being created by the business. It's kind of a holistic view of the worth of their existing policies. So these numbers together, persistency, claims, IEV, they demonstrate an ability to balance growth with
Reliable service and long-term value creation.
And connecting LIC's performance back to the overall Indian market opportunity. You mentioned underserved earlier.
Hugely underserved still.
savings, which reached over 18% of GDP last fiscal year. And there's this growing preference, culturally almost, for long-term financial products like life insurance. All of this creates a highly favorable environment for growth.
So strong tailwinds.
Absolutely. And LIC, with its dominant position, its reach, it's just uniquely poised to capitalize on these macro trends. It's really a confluence of factors working in their favor, potentially.
Okay, so moving towards the future then. What are LIC's forward-looking strategies and ambitions?
What are the key focus areas?
Well, they laid out several. Key focus areas include continuing that digital transformation we talked about,
Right.
increasing the share of those non-par products,
Yes, their commitment to ESG, environmental, social, and governance is also a significant aspect they highlighted. While they've integrated Sustainable Development Goals, the SDGs, into their operations, they claim positive contributions to at least 14 of the 17 SDGs.
Any examples?
Yeah, things like their Beam-a-Gram initiative for rural development, medical camps, scholarships that Bima Saki or Jana we discussed.
Right, the women empowerment one.
Exactly. Sanitation projects, even renewable energy
initiatives, like installing over 8.5 mW of rooftop solar capacity on their buildings.
So tangible ESG efforts.
Seems so. And these aren't just, feel-good things.
They're actively evaluating options to enter the market.
But they can't directly sell health insurance yet.
Not directly participate, no. The current regulations allow composite insurers like LIC to invest in health insurance companies, but not underwrite health policies themselves directly. So they're exploring how best to leverage that pathway. Could be an investment, could be a partnership. They're figuring it out.
Okay, so watching that space and digital.
He really doubled down on that,
Yeah.
clearly articulated the vision for LIC to be extremely competitive on the digital front and one among the top in digital service offerings by 2030 or even earlier.
Using AI and ML.
Exactly. Leveraging AI and machine learning. This isn't just about back-office efficiency. It seems to be about fundamentally changing how they interact with customers and manage risk.
And finally, just a note on ownership structure.
Right. Worth remembering, the government still holds a majority stake, and there's a stated plan to reduce that stake down to 90% by 2027. So, gradual disinvestment continues.
Interesting times ahead for LIC.
Definitely. This blend of, established dominance, deep roots, and these forward-looking strategies, particularly in digital and product mix, it really positions LIC for continued relevance and likely significant growth in the years ahead. It's a fascinating balancing act between tradition and innovation.
So what does this all mean for you, our listener?
Well, LIC's Q1 FY26 results show strong performance pretty much across the board. But it's not just about the headline numbers. It's driven by these deliberate strategic shifts.
Moving towards higher margin products, diversifying how they reach customers. And there's significant investments in digital transformation and ESG initiatives signal that this colossal
Which leads to a final thought for you to ponder. Given India's vast, untapped insurance market, that huge protection gap, and LIC's really unique combination of deep traditional roots, that incredible feet on the streets presence, especially in rural areas, combined now with this accelerating digital adoption, how might this blend redefine the future of insurance, not just in India, but maybe, just maybe, as a model for other global markets facing similar challenges of scale, access,